PENCOM commences retirees online verification today. African Development Bank to provide women $150 million for agriculture. Dollar pullback on strength of rising market optimism, just as oil prices fall 1% with international benchmark Brent crude slipping 0.97%. Plus, Nigeria leads Africa in global gross domestic product growth rate. The program is Business Express, reaching you from Abuja, Nigeria's capital. I am Abubakar. Now let's begin with PENCOM. The National Pension Commission, PENCOM, has revealed plans to commence a pilot scheme of its online pre-retirement verification and enrollment exercise for retirees in government ministries, departments and agencies in the country. The Commission, at a workshop on positioning the pension industry in the post-COVID era held in Lagos, said the enrollment will take off between August 2nd to 20th, 2021. PENCOM said it could register, verify and enroll prospective retirees of Treasury-funded federal government MDAs to compute their accrued pension rights and budgetary allocations, starting with selected MDAs in the 6 geopolitical zones and the Federal Capital Territory to test run the application with real-time data. Assistant General Manager, National Data Bank Management Department, PENCOM, Mariam Bello, said since the commencement of the Retirement Savings Account Transfer System, 25,645 workers have transferred a total value of 102.59 billion naira to other pension fund administrators. Now, Chairman Body of Bank CEOs, Herbert Wigwe, said authorized financial institutions in the foreign exchange market will ensure full compliance with the CBN directives to ensure FX stability. Wigwe said customers could walk into their banks to purchase dollars for legitimate transactions. He noted that the banks had agreed that the process will start immediately following a meeting with the CBN. Wigwe, who is also Group Managing Director of Access Bank PLC, said the banks were ready to meet the mandate of the CBN, adding that they have more than enough capacity to deliver. He explained that the process will be centralized to avoid abuse. In addition, Wigwe said banks yet to adhere to the mandate by the regulator to create a forex desk will be sanctioned. According to the CBN governor, on average, and the bank trades $110 million weekly FX of $20,000 each to over 5,000 BDCs, with a total annual sales of $7.2 billion to Nigerian BDCs. The governor also announced a ban on the over 500 BDC applications it receives monthly. Now, the International Monetary Fund retained its growth outlook for both Nigeria and the global economy for the year 2021, stating that the global economy is projected to grow 6% in 2021 and 4.9% in 2022, while Nigeria's growth outlook has been maintained at 2.5% for the period. This is contained in the July World Economic Outlook of the fund.
Manufacturers should prioritize deliveries to low and lower middle income countries. It is important to remove trade restrictions on vaccine inputs and finished vaccines and make additional investment in regional vaccine capacity to ensure sufficient production. A related priority is to ensure that financially constrained economies maintain access to international liquidity. To ensure this, major central banks should clearly communicate their outlook for monetary policy and ensure that inflation fears do not trigger rapid tightening of financial conditions. A general allocation of special drawing rights equivalent to $650 billion, as proposed by the IMF, should be completed quickly so as to provide liquidity buffers for countries and help them address their essential spending needs.
For 2022, IMF says it forecasts Nigeria's economy to grow by 2.6% and South Africa by 2.2%. Now, before the pandemic, 6 of the 10 fastest growing economies in the world were in Africa, and with global recovery in progress, Nigeria is not doing badly in the recovery strides. Joining me to take a look at the July edition of the IMF's World Economic Outlook is Dr. Taifa Abraham. He is a development economist. Glad to have you join us on Business Express.
Thanks so much. Thanks for having me.
Okay, the latest figures, it says that Nigeria, Angola, and South Africa will likely go back to pre-pandemic times by 2021. What's your take on that?
That would depend on how much we take vaccination seriously, because for the recovery, economic recovery for 2021, 2022 upwards, is anchored seriously on how countries take COVID-19 vaccination seriously, and aside the vaccination, how compliant we remain in terms of containing the COVID-19 pandemic. Because this time around, global economic recovery is anchored on countries' ability to keep away the scare of the pandemic, because the way it works in economics is this: the pandemic is a shock on economic equation, and for investors, the COVID-19 is the risk. So as soon as you guarantee investors that you are containing the risks, businesses will grow, consumption can also grow, which will have a positive feedback on economic growth. So those countries that you rightly mentioned, certainly they will even surpass pre-pandemic growth rate, but it's important to contain the COVID-19 pandemic.
Another thing of concern is the issue of people rejecting the vaccine.
The IMF World Economic Outlook, the July 2021 version, is beautifully titled. There's a new divide, there's a new fear. The global economy now is divided into two. There's a new argument for and against. Those who have been vaccinated are already seeing those who are not vaccinated as the new risks to tackle. So for countries, especially in the advanced economies, that vaccination is taken really seriously, they are looking at very fast growth, even surpassing pre-pandemic levels. But for countries like Sub-Saharan Africa, less developing countries, where this Delta variant is trying to show up its ugly head, ensuring that the people are vaccinated and public enlightenment is put out there to ensure that people contain that spread is really important. So generally this time around, economic recovery is beyond the financial equations, but we must also factor health risks and how to mitigate against that health risk, which is COVID-19 pandemic, by the way.
Okay, the forecast retains the Nigeria growth forecast at 2.5% for 2021. Before that, we have other reviews as well. In all, what does this numbers mean?
The IMF, International Monetary Fund, World Economic Outlook, this time around, the one for July 2021, has a very good convergence with the document put out by our own Nigeria's Ministry of Finance, Budget and National Planning. The Budget Office projects real GDP for 2021 to be 2.5, and we see that the World Economic Outlook report of the IMF also accepts that 2.5. So it's a beautiful thing to see that there's this correlation between our own economic outlook and how the global financial institution is also saying us. But let's not forget, beyond real GDP, World Economic Outlook also contains other forecasts. It has forecasts for consumer prices and current account balance. The good news for Nigeria is that our current account deficit is also projected to decline, even though it's negative, but projected to decline. Every leader wants to capitalize on his strength and minimize the risks. So the strength for Nigeria is that whatever is driving our real GDP growth, which is all the monetary policy put together with the fiscal policy and all the social investment program that the government is putting out there, we have to consolidate on it. But one other area we need to work on is to ensure that we take a second look at the rate at which our overall fiscal deficit is expanding. The IMF projects that to be about -3.something%, which is a huge concern. But good enough again, the Federal Minister of Finance, Budget and National Planning, in 2021 budget projected a fiscal deficit that is higher than the 3% as specified in the Fiscal Responsibility Act, both including when you include government-owned enterprises and when you exclude them. But in 2022, we see the fiscal deficit staying below the 3% threshold as recommended by the Fiscal Responsibility Act. So all you see playing out in Nigeria is serious work from the monetary and fiscal side working together to ensure that our economy remains resilient.
Okay, they propose drawing rights by the IMF, $650 billion. How will Nigeria take advantage of that?
Well, that with IMF, anything IMF has to do with conditionalities. And for IMF, right-sizing public sector is something they like to push out there. Taking a second look at fuel subsidies is another issue of concern. Then overall, putting together reforms that gives a boost to private sector is under concern for the IMF. So while the IMF is one of the Bretton Woods institutions that is always concerned about right-sizing the public sector, we as Nigerians must take a second look at our own peculiar situation. And I tell you this, in advanced economies, post-pandemic recovery is anchored on companies recruiting more employees, because right now everybody wants to cover that supply gap. But in African countries where our private sector is a bit on the low side and small scale businesses are struggling, we must be very careful how we jump on every conditionality as spelled out by IMF, so that while we accept the positive side, we must ensure that it doesn't hurt civil servants, it doesn't hurt the public sector. So yes, it will be important we try to see how to cash in on that in terms of accessing those drawing rights. But again, we must be mindful of the conditionalities, especially ensuring that it doesn't hurt the public sector, especially civil servants.
Okay, you said the rate of recovery is hinged on vaccination. How are we faring?
Well, right now, Nigeria, luckily, is doing its I think we're on a positive outlook there in terms of how we are faring with the COVID-19. So far, so good. We've all been very careful and ensuring that it doesn't spread. You know, all religious organizations, work environment, private and public, everybody is putting in effort to ensure that the virus is contained. So in Nigeria, generally, we have God on our side and we have the carefulness of Nigerians. No Nigerian should wish for a lockdown again, because lockdown means more poverty, more restiveness and things like that. So complying with CDC guidelines is very important at this point.
Okay, let's talk about measures now on how we can sustain the recovery effort. What measures do you think we need to put in place to?
If you look at the IMF World Economic Outlook 2021 report, July version, it makes it very clear. Already we have a positive trajectory on real GDP growth. Yeah. Where we don't have a beautiful, nice-looking trajectory is on the fiscal deficit. So overall fiscal deficit, meaning that as much as we want to spend on the expenditure side, the revenue to do that is not there as we would want. So why for the federal government, borrowing seemed to be a very good option. For the public, civil society, organized labor, what we are concerned about, what the people are concerned about, is ensuring that those loans are project-tied. Even the ones given to states, that the project they will be using it for is clearly stated. So this is the point. This is where at a point where we cannot do without holding public engagement, town hall meetings with CSOs, with organized labor, to let them know what government is doing so that they too can buy in. So that's one. Then secondly, the support on small-scale businesses need to continue. The central bank is already doing a lot through Anchors Brewers program, supporting small businesses here and there. It's important to sustain that effort. Although what is important is to ensure that the central bank coordinates those projects with the relevant ministries, so that these ministries will not see what CBN is doing as overshooting its boundary. But for the CBN, what is important is ensuring above all that we also tackle inflation, which the CBN is already doing very well, and also tackling this issue of our exchange rate just going off trajectory. And one unique thing that the CBN is doing, which I think should be sustained, is that the inflation we have now is insecurity driven, it's food supply shortage driven. So the food inflation that we have now is not a monetary phenomenon. It's not something that is determined by money supply, sale of treasury bill, and buying of treasury bill. It's something that is coming from the non-monetary component of inflation. But for CBN, the mandate remains the same: tackle inflation. So what CBN is doing in terms of ensuring that it has a lot of reserves, that it buys up excess harvest to supply in times of shortage is really important as a way of keeping food inflation low, so that overall consumer price will be very low and stable as well.
Before I let you go, how do you look at the recovery with the slow vaccination? Are we likely to see a longer recovery?
Already, many economists, including myself, did not see the recovery for the Nigerian economy out of the recession very fast. But you can see already that the judicious mix of monetary policy and fiscal policy helped Nigeria to recover faster. So I have a strong, I'm optimistic that our growth will be sustained. But to do that, we need to sustain the expansive fiscal we need to expand government expenditure beyond what it was for 2021. But aside increasing government expenditure in terms of numbers from 13 trillion.5 to 13 trillion.9, we need to ensure that the revenue to do that is there. And taking a second look at taxes will be a very good option of getting this revenue, especially taxing big cooperatives and stop giving them tax incentives and holidays in favor of our small businesses.
Thank you so much, Dr. Taifa Ibrahim, development economist.
Thank you so much. My pleasure.
Thank you. The Nigerian Economic Summit Group has said governments at all levels must intensify efforts to address challenges of kidnappings, theft, and other social vices, especially given that a secure environment is precondition for economic growth, job creation, and poverty reduction. Chairman of the group, Asu Igodalo, made the call at the inauguration of the Joint Planning Committee for the 27th Nigerian Economic Summit. The theme for the 27th Nigerian Economic Summit is Securing Our Future, the fierce urgency of now. Igodalo said the 27th Nigerian Economic Summit will present a platform for stakeholders to highlight Nigeria's core socio-economic vulnerabilities and the associated risks to come up with solutions that alleviate these vulnerabilities while exploring potential opportunities and priorities that will accelerate economic development. Oil prices were lower in the afternoon of Asia trading hours, with international benchmark Brent crude futures slipping 0.97% at $74.68 per barrel. U.S. crude futures declined 1.03% to $73.19 per barrel. Gold prices slip has improving risk appetite and demand. Let's take a look at the commodities market. Cross-border trading is set for a lift at the African Securities Exchange Association, signed a contract to roll out an African exchanges linkage project, link technology platform for routine orders and trading and trade confirmations among stockbrokers on NGX and 6 exchanges. To this end, 7 of Africa's leading securities exchanges are working together under the help to boost Pan-African investment flows and bring more liquidity to African markets. Cross-border deals are transactions that involve more than one financial jurisdiction or involve many stock markets and national regulatory authorities. The supplier is a global firm experienced in capital markets solutions across the Middle East and many emerging and frontier markets, which was awarded the contract after a competitive bidding process that attracted applications from top international suppliers in 18 countries. The help is a joint initiative by Asia and the African Development Bank aimed at unlocking Pan-African investment flows, promoting innovations that support diversification for investors and addressing debt and liquidity in the markets. It was a negative at the close of transactions in the week ended. Muplanda Kok has more.
Taking on price appreciation, which began since last year, impacted the Nigerian equities market negatively in the first 7 months of 2021, as investors lost 973.2 billion naira. For last week, the NGX All-Share Index depreciated by 0.31% to close the week at 38,547.08, while market capitalization dropped to 20.084 trillion naira. 1.3 billion shares worth 11.8 billion naira in 22,982 deals were traded by investors on the floor of the exchange. All indices finished lower with the exception of the NGX Premium, NGX Consumer Goods, NGX Oil and Gas and NGX Sovereign Bond indices, which appreciated, while the NGX SM and NGX Growth indices closed flat. The financial services industry led the activity chart with 715.3 million shares. The conglomerates industry followed, while the oil and gas industry occupied the third place. Trading in the top three equities, Transnational Corporation of Nigeria, Owando and Fidelity Bank, measured by volume, led the activity chart in the week. Also, a total of 12,242 units of exchange-traded products ETPs, valued at 911,149.30, were traded in the week in 17 deals, as well as 29,324 units of federal government bonds, valued at 30.7 million naira, in 12 deals. 37 equities appreciated in price. 35 equities depreciated in price, while 84 equities remained unchanged.
Now, investors across the globe trade with expectation as stock markets begin the month of August on a positive note following Asian markets recovery. And Ekalko has Global Market Update.
Hello and welcome to Global Market segment. Stocks in major Asian markets rose on Monday as investors picked up bargains following a recent rout. In Japan, the Nikkei 225 climbed 1.82% to end at 27,781.02. The Shanghai Composite jumped 1.97% at 3,464.29, while Hong Kong's Hang Seng Index gained 1.06%. European stocks also picked up after a recovery in Asian equities overnight. Germany's DAX was 0.35% higher, with London's FTSE adding 0.97% to lead gains, as CAC 40 of France also traded in positive territory. In the U.S., stocks rose in early trade on the first trading day of August, following sentiment in Asia and Europe. Dow futures rose 182 points, S&P 500 added 0.59%, and Nasdaq 100 climbed 0.54%. Markets in Africa followed similar sentiments across the world on Monday, as most stocks on the continent entered positive territory, apart from Kenya's Nairobi All-Share, which was down 0.16% at 177.52. That's Global Markets. I'm Neka Oko. It's back to Musa.
This is where we end this edition of Business Express. We value your feedback, so keep the comments, observations and suggestions coming. Be informed that all previous episodes are available on YouTube on the NTA's channel. Business Express returns Tuesday by 9:30 a.m. I am Musa Abubakar saying stay safe.